Welcome to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank that brings you market views and insights on the go.
Hello everyone, my name is Manpreet and welcome to Cut to the Chase. Now I don't know how many of you are into the hobby of plane spotting, but being in a city with a busy airport, one of my favorite activities with my son is to watch planes landing into or taking off from Changi Airport from a handful of popular spotting sites. Now it's exciting to see obviously a larger volume of flights into the airport as air travel restrictions ease, but the highlight of our Sunday evening this weekend was spotting Scoot's larger Boeing 787 aircraft. This larger plane, of course, was and I believe still is used on flights to several cities in Australia, and the fact that larger capacity aircraft are being brought back online by airlines like Scoot is testament, of course, to the recovery in air traffic. Now, if we're talking about traveling to Australia once again, we must talk about the Aussie dollar. It's been a few weeks of downward pressure on the currency, with several factors pushing the currency lower. We've had growth worries in China amid zero COVID policies and relatively poor economic data recently. We've had a period of softness in key commodity prices. And there's of course a strong surge in the US dollar and a lack of risk appetite more broadly, which is key for a currency that is often viewed as correlated to risk sentiment. However, over the last few days, the Aussie, together with other major commodity currencies, appears to be staging a strong recovery as many of these factors are starting to slowly turn. Now, easing US dollar strength pressure is a key factor, of course. We had Fed Chair Powell yesterday say once again that the Fed would not hesitate to raise rates until it saw clear and convincing evidence that inflation was coming down towards its target 2%, and would be willing to raise rates beyond widely accepted estimates of neutral level if needed. But it's interesting that the dollar failed to rise further despite those comments, and in our view is testament to just how much is now in the price. However, there's also some welcome positive news out of China as well, which remains a key export market. Shanghai announced it had achieved a key stated milestone of zero COVID cases outside of quarantine zones for 3 consecutive days, which could be one signal, of course, that the city could be passing the most acute phase of lockdowns. Now, all of this has meant the focus has returned to the domestic interest rate outlook in Australia, which we see as supportive of the Aussie dollar. Now, minutes from the last Reserve Bank of Australia policy meeting showed policymakers had considered a sharper rise in rates at its May policy meeting, but eventually settled for just 25 basis points, given they had the opportunity to review rates monthly. Now, markets, of course, are pricing in another rate hike in June and a rise in policy rates quite sharply to over 2% by year end versus just 0.4% currently. Now, this is key because, as we've discussed in the past, currency markets are super focused on relative interest rate differentials at this time. What this means is that while strong commodity prices should also be a support, what places commodity currencies like the Aussie in a more favorable position right now is that they are also being supported by their own domestic interest rate hikes. In the face of what's been a very strong US dollar supported by rising policy rate expectations, this is a key source of support behind a positive view on the Aussie. Now, from a technical standpoint, the turnaround in consolidation above 70 cents to the dollar is a short-term positive. However, the Aussie-US dollar pair would need to rise above key technical resistance at 0.7145 in order to indicate more strongly that a trend reversal was indeed underway. The risk, of course, is that this is only a short-lived correction in the US dollar, in which case we'd keep a close watch on key support for the Aussie-US dollar pair at 68.7 cents to the dollar. So a few key technical levels to watch amid what we think is a brightening outlook for the Aussie dollar. But we'll pause there. As always, if you enjoyed this podcast, please don't forget to rate and like it. Thanks for listening and wish you a happy trading day ahead.
Thank you for listening to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank. For more details on the latest market insights, subscribe to Standard Chartered Money Insights.